How's it going, guys? My name is Franker and welcome back to the channel. Today we're going to be going through the Bitcoin halving. We're going to be talking about what the Bitcoin halving is, what sort of effect it has on the supply of Bitcoin, and how it has played out essentially with the price of Bitcoin in the past and what to expect going into the future. Now, before we do jump into any further into the video, guys, remember to hit that subscribe button if you are new. If you do enjoy cryptocurrency content, we do typically post weekly. I will, if you guys hang around to the end of the video, I do want to do a little bit of a channel update, just to let you guys know what is going on if you are interested. But do hit that subscribe button. Let's push up to 500 subs. We post a variety of different crypto content, exchange reviews, technical analysis, all different kinds of things. So if you do like that sort of content, definitely subscribe. Okay, now for those new to crypto and Bitcoin in general, the first question we have to ask, obviously, is what is the Bitcoin halving? So basically, the Bitcoin halving, an event where the reward for mining Bitcoin transactions is cut in half. That's a very simple look at it. Now, let's just read through this article quickly, just so we get the rough idea of exactly what the Bitcoin halving is. So one of the most pivotal events on Bitcoin blockchains, or Bitcoin's blockchain, is a halving, when the reward for mining is cut in half. Since 2020, the network participants validating transactions have been awarded 6.25 bitcoins for each block successfully mined. The next halving is expected to occur early to mid 2024, when the block reward will fall to 3.125. Over time, the impact of each halving will diminish as the reward approaches 1 Satoshi. Okay, so obviously, a lot of people would have heard of Bitcoin mining. So basically, people use their GPUs to validate blockchain or Bitcoin's blockchain transactions, and then in return for that, because obviously you have to spend money on a GPU, electricity, yada yada, people will receive a Bitcoin reward in the for each block mined, and at this current point in time, each block rewards users 6.25, and that takes, I believe it's about 10 minutes per block to be mined each time, and whoever mines that block the quickest gets that Bitcoin reward. And then each halving, that reward is halved. So obviously, as we just said, at the moment, people for each blockchain, for each block successfully mined, the person mining that or validating the transaction through the Bitcoin blockchain using a GPU or whatever you might have it, gets 6.25 bitcoins, just straight to them, or often it is in a bit of a pool form, so you might get, your fraction of the pool, but that is going to get halved to 3.125. And the obvious effect this has is that it halvings reduce the rate at which new coins are created and thus lower the availability of new supply. And then obviously the final halving is expected to occur in 2140, when the number of bitcoins circulating will reach a theoretical maximum supply of 21 million. The ins and outs of the Bitcoin halving aren't really the important part of this. Obviously, if you really want to go out and mine Bitcoin, you can absolutely do that. But as investors, we just want to take away the important information, which is the lower available supply, amount of new supply coming onto the Bitcoin blockchain. So this chart here is the number of Bitcoin tokens in circulation from October 2009 to August 2nd, 2023. And you can see how the supply basically curves off over the top. This is in millions. So October 2009, there's 1 million Bitcoins. And then there's a rapid growth in the amount of Bitcoins. Obviously, that back when these were getting mined, the reward was 50 Bitcoins for each block successfully mined. So, you could have got 50 Bitcoins if you were the one to validate the block transaction. And then it halved to 25, to 12.5, and then to 6.5. Is that right? I'm not sure. Anyway, it doesn't matter. The point is that the supply basically curves off, and it's going to continue to plateau over time to essentially where it's going to be going up such a small amount each time. Obviously, as we said, it's going up 6.25. Is that what we're saying? 6.25 blocks every 10, or bitcoins every 10 minutes roughly, and it's going to go to 3.125, which is far, far smaller. So each Bitcoin halving is going to reduce the new supply of Bitcoin coming onto the market essentially. And if we think very simply about supply and demand, obviously if supply is reduced and demand stays the same, that will increase the price of Bitcoin. So to understand this further, we simply just need a supply and demand chart, just a very simple one. We have to think about it if supply is being reduced, although not actually reduced, but the new supply coming onto the market is reduced, we could, if we take the quantity, the Q line, and we move it to the left, shift it to the left over this way, hopefully you can understand where I'm going with this, it moves, and we then redraw this line basically, and we move it up. That means that the price will increase. The supply, reducing supply, assuming demand stays the same, will increase the price. So if we have a look through history and we have a look at what sort of effect this has on Bitcoin, as we just said, obviously reducing supply, moving the quantity essentially to the left, pushes up the price. So what does this sort of have? What sort of effect does this have on Bitcoin? Well, we can go back and look at our prior halving. So obviously the Bitcoin 2012 halving, the reward was set at 50 and then it went to 25 Bitcoins per block. And you can see how it kind of affects the price. Obviously mining goes to about 3,600 Bitcoin per day. And if we have a look at the price, so the price before the halving date was $12.35. And then 1 year later, price skyrocketed up to $964, right? And we see a very common trend. Bitcoin halving, the second Bitcoin halving, supply goes from 25 to 12.5 blocks per day, about 1,800 Bitcoin per day. Price skyrockets from $663 to $2,500 a year later. Third halving in 2020. A lot of people probably would have been around for this and seen it. This was a very not necessarily the halving itself, but what happened after the halving. The price of Bitcoin absolutely soared. Obviously, the Bitcoin reduced from 12.5 to 6.25, and the price went from $8,500 to $64,000. And as we know, it then went on to peak at $69,000. So insane price movements, right? And what do we have coming up in April 2024? Well, another Bitcoin halving. So if we go back through history, clearly the reduction in supply has a clear impact on the price of Bitcoin. Now, obviously, the Bitcoin halving doesn't solely skyrocket the price of Bitcoin. Demand has to come in to meet that sort of reduction in supply still. But you can clearly see, at least from maybe not necessarily, clearly a supply and demand sort of effect, but perhaps also a narrative sort of effect. We see this play out very often where basically, people go, the Bitcoin halving is the next big thing and it's going to send Bitcoin to yada yada price. That sort of effect compounds, and then we see obviously sentiment grow from, bearish and, the world's going to end and Bitcoin's dead, up until people think that Bitcoin's, the next best thing and everybody's euphoric, and then price obviously peaks after that. So going into our next halving, what do we kind of expect? If we have a look back at price, you can clearly see that, okay, after the halving, Bitcoin's price basically pumped up for 12 months. From that point, there was a small red candle here and a bit of price congestion and a bit of stagnation, I guess you could say, going into the halving. The second cycle we saw similar with around the halving, where Bitcoin had 2 months down period after the halving, probably a bit of a sell the news sort of event. And then from there, price rallied for 17 months to the peak. Then in our next cycle, this was a bit of a funny one. Now we did yet again see a red month just after the halving. And obviously that was also around the COVID dump. So a bit of a crazy time, the COVID dump, the huge recovery, the Bitcoin halving, and that obviously same thing again, sentiment basically snowballed into euphoria, into the peak 18 months later. And then going into our fourth halving, I think that's correct. We can kind of see the same thing. Now, something that I do want to note is that we have been up here for 6 months straight. That is very, very rare. If you go and have a look at my Twitter post that I just did, link in the description below, quick shill. But there is, you can see I've just gone through the past 2 cycles, and it's very rare that we see 6 months up in a row. Typically, we will see a reversal come in after this point. If not, maybe not in March, but maybe, March, April, maybe May, we'll see a pullback come in. So there's a good chance we see something similar, some sort of price stagnation around the halving. And that's what we kind of talk about, where it's a bit of a narrative effect. People get overly euphoric around the halving. People think that this is, going to be the catalyst that sends Bitcoin to $1 million, but then we end up getting a bit of a sell the news event, and people get wrecked, and then they sell, and then, from there on, Bitcoin can pump. And the other thing we want to look at is basically how long is Bitcoin going to rally after the halving. Well, we can see that we've kind of been getting some lengthening cycles, you could say, from the halving to the peak. So 12, 17, 18. And I think it wouldn't be unreasonable to say that we're going to get a similar sort of effect. Now, are we going to pump up to $700,000? No, I just drew that box there. Don't worry about the price too much. More so just think about the timing that we've got on this box. And it's kind of, lengthening cycles. Obviously, as Bitcoin matures as an asset, it's going to have lengthening cycles eventually at some point in time. If we assume that the asset class is going to continue to grow in monetary value, then yes, lengthening cycles will occur. And I think this could be, yet another slightly longer. It takes us out to roughly December. If we assume it's 20 bars, if we assume it's 18 bars, it takes us out to October, 19 November. And that's kind of where I've been sitting with this sort of chart that we've been taking a look at. I think that this is probably a reasonable time to suggest a peak. But there is another catalyst that is going to likely send Bitcoin into the next bull market that we're going to see over the coming year or two, and that is the spot ETF. Now, is this going to send Bitcoin to $10 million? Is Bitcoin going to become the global reserve currency? Well, probably not. But are we going to see increased demand for Bitcoin? Absolutely. And if we go back to our supply and demand chart, obviously, reduced supply, increased demand, price has to increase. And we can just see simply on this Twitter post. So this ETF has been out now for roughly a month, give or take, and we can see that the market value is already at $6 billion, or 120,000 Bitcoin have essentially been bought up by BlackRock. And obviously that doesn't include the other, I think that's meant to say without the other 8 ETFs that are on the table with other, that are with other companies like Fidelity and yada, 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 or the other ones. So this is just the BlackRock one, and we can see 120,000 Bitcoin have been accumulated. That is enormous, and obviously that is outpacing the how much Bitcoin is mined each day, approximately 900 Bitcoins. 120,000 in a month for BlackRock alone is clearly outpacing the supply. So the ETF alone is putting huge amounts of demand into the Bitcoin, into Bitcoin as an asset, and it's outpacing the supply. And this is going to halve. Remember, come April, this is going to go down to roughly 450 Bitcoins each day. And I doubt that demand is going to slow up too much. And if we have a look at what happened last time an ETF was approved for gold, well, clearly the pitch is pretty clear on what can happen. We had basically a decade, or not quite a decade, I don't think, from November 04 to August, September-ish 2011. So roughly a 7-year bull market. Huge strength for gold off the back of the ETF. So we can see what sort of effect that institutional demand can have on an asset like gold, and it's likely going to have the same effect on Bitcoin to this extent. I can't really say, not necessarily. I wouldn't think so, because obviously if this much demand can come into gold, into Bitcoin, then definitely people can still sell. When Bitcoin rises significantly, people are still going to sell, probably just at a far larger pace, obviously, because there's going to be institutions now selling Bitcoin. So it's going to, it might exacerbate the bull market, but it's not necessarily going to send it into an indefinite bull market. So the Bitcoin halving is going to basically send a supply shock through Bitcoin over the course of a night. April 19th is our expected date. So when that happens, expect some, maybe not straight away, but over the coming year or two, as we've been saying, expect some sort of supply shock. And obviously the Bitcoin ETF market value, 120,000 Bitcoin for BlackRock alone. This is likely only going to increase over the coming year or two. And think about this from a narrative perspective. As the narrative improves, because at the end of the day, people still aren't really interested in Bitcoin. That's a simple matter of fact. If you talk to your local Joe, Bob, whoever it might be that you talk to, just your regular person, they don't know much about Bitcoin still. They don't really know what's going on. They probably think it's dead. Long gone are the times, when I tell people that I'm invested in crypto, they basically look at me and go, what are you doing? Little do they know that we're up over 100% from the lows, and we have these huge events that are coming. The halving, the ETF, which has now been approved, will likely send Bitcoin into its next bull market over the coming year or two. But of course, do proceed with caution, particularly with Bitcoin being up the last 6 months straight. There is likely a really good chance of a pullback. And of course, going into the peak, that's when people, lots of people buy up around these prices, and then they get absolutely wrecked. So be careful, do proceed with caution, but also now's the time to be buying, in my opinion. Not financial advice, but these events are going to send Bitcoin into the next bull market. Anyways, guys, that is going to do it for this video. If you are new to the channel and you enjoy this sort of content, remember to subscribe. We're going to push up for 500 subs. Let's keep going up and up and up. If you had any questions, feel free to comment them down below. Hit that like button. And of course, I do have some referral codes down in the description below, so do be sure to hit those. Get your free $10 worth of Bitcoin, or I think it's $25 worth of Crow, or depending on which referral code you use. Totally up to you guys. Anyways, enjoy the rest of your weekend, and I'll see you guys later. Now, for those of you that are curious as to why my upload schedule has been abysmal lately, or not abysmal, but I'll admit I've been struggling to keep up a little bit with my weekly upload schedule. I've just recently changed jobs, so basically my schedule is a bit out of whack, and I'm just slowly trying to figure out when I've got time to upload, when I've got time to film, record, yada yada yada. So hopefully over the coming month to 3 months, I can get back into that rhythm. Same with Twitter. I fell off Twitter completely for about a week or two there. Didn't upload a single thing, but hopefully now that I'm in a bit more of a routine, I know what I'm doing at work, I can continue to upload new content on Twitter, YouTube, maybe even some different platforms, hopefully over 2024. But yeah, that's pretty well what's going on. If you guys did enjoy, thank you all for watching and sticking around to the end. I'll see you in the next one.